Hey everyone, my name is Tyler, and if you're like me, coming into 2018, you've got a little bit of debt. You'd like to make this year count and get rid of that debt. Today I'd like to show you this little spreadsheet I've made. Hopefully it can get you on the right track to clearing off some of your debt and kind of help you progress as an individual or family on a month-to-month basis. Now this spreadsheet does run for 12 months, as you can see at the bottom here. You can see my mouse. At the bottom we have our yearly overview, and then we have some other tabs here. Mainly we're going to focus on the months here from January to December, but there's some other useful information, and we'll kind of go through the spreadsheet first before we go into the mechanics of it. So the first tab here is our yearly overview, and as you can see right now, there's not much to it. It's got the rules of the spreadsheet, a little chart, and a little table at the top. You don't need to touch anything on this tab here. Basically, this tab's all information for you. So if you look at the information sheet here, it says only edit boxes that are not filled with color. Okay. Well, we can see here that this box right here is filled with color, so we're not going to touch that. The reason being is that the second rule here, calculations are automatically applied. So the ones in color have calculations that are applied. And if you click on one of these boxes here, you'll see at the top that there's some type of mathematical equation that I've filled there for you. And that kind of goes from the spreadsheets here. As you can see right here, it's calculating the net expenses for April. So let's progress on, and I'll come back here later and show you how this one works. The next tab is debt balances. So if we look at debt balances, the purpose of this tab here is to kind of walk you through and help you track your month-to-month debts. So let's say you have a car loan, like most individuals, and let's say in January your car loan is at $12,000. As you progress from month to month, if you want, you don't really necessarily have to use this, but you can go ahead and calculate what the balances are left on that payment here, just kind of help you visualize how much debt you actually have. Now there's other apps that'll kind of help you with this, and Credit Karma is one of the best ones. But like, let's say for instance in February, you go down to 11,670. Let's say you made a $330 payment, and so that'll kind of go down there. And you can also put your credit cards in here as well. So let's say we have credit card A and credit card B. And we'll say those each have $2,000 on them. And then we'll also have a student loan, and we'll say that has $30,000 on it. So you can see at the bottom here, it's got the total, and it'll tell you from month to month how much you've, hopefully you're decreasing your debt ratio throughout the year. Over here there's a little interest tab. If you'd like, you can put how much interest you're paying. So let's say you're on the car loan, you're paying 4% interest. On the student loan, you're paying 2% interest. On the credit card, you're paying 22%. And on the other credit card, you're paying 15%. This kind of help you visualize, say, hey, this card needs immediate attention because it is really high. But that's kind of all information. So progressing on here, we go to the savings balance tab at the bottom. And this brings up something very similar to the debt balances, but instead of debt, it's how much money you're saving. And I've left plenty of space here. Let's say you've got just your traditional savings account. Let's say you have a Roth IRA retirement account. And let's say you have your stocks, just your immediate funds. In your savings account in January, let's say you had $2,000. In your Roth IRA, you had $10,000. And in your stocks, you had $5,000. Now hopefully at the bottom here, from a month-to-month basis, your savings is progressing. If not, you might want to look through and see why you're losing money or why it's not progressing. And then any notes on the account that you particularly want to save, you can put in here. So, like I said, the debt balances and the saving balances tabs are mostly for your information. You don't have to utilize them, but they're just kind of so you can visualize where you're at as an individual or family. So let's get into the actual bread and butter of this spreadsheet here. And let's go to January. And this is where the real fun starts. So this is how you track your month-to-month expenses and how much money you're actually making. Now you can do this as an individual or family. It really doesn't matter. And I like to I have it classified here into several categories. It is monthly, and like the first rule, don't edit anything that's colored in. So you see up here, these are colored in. Don't necessarily modify those. Don't modify any of these total tabs, because the reason being is because they all have functions that are applied to them, and they'll automatically be filled as you fill out the information here. So as for living expenses, I'm going to fill this out as if I were an average individual in the United States, and the average person makes $37,000 a year after taxes. That's approximately $3,200 a month. So I've got the income tab here, and let's just say this individual gets paid once a month. Let's say they got paid on the 1st in the form of the $3,200, and that was just their normal work pay. If they made extra money, they could post it there, and if that's the only income they made, they could just leave it there like that. And you can see down here at the bottom, it'll say the total monthly bill was $3,200. So that's how much they've currently made this month. Their current expenses at this time of meeting is no money, so their currently net revenue is $3,200. But let's go ahead and calculate the average person's living expenses. Every person has a house, so we'll have the house here, either renting or leasing or own, and we're going to estimate that the house costs $700 a month. We have our electric bill, our water or trash, internet and TV, cell phone, car insurance, medical insurance, your food or groceries, and your gas. And we'll kind of fill these in with the amount the average person might spend on these utilities here. Now, this is the estimated. This is how much you normally think you spend month to month. So your house, that shouldn't change. Your electric, that might vary a little. Same with the water and trash. Your internet, that shouldn't vary too much. Neither should the cell phone or your car insurance. So these are kind of your living expenses, things that you pay on a month-to-month basis that you have to pay. The actual tab is when you get that monthly bill and you actually pay it. That's how much you actually put down toward that expense. So we'll get to that in a minute after we fill out this tab here. We have our credit cards tab. So these are all your debts that you own on credit cards, and like we saw in our debt balances tab, we had credit card A and credit card B, each with a $2,000 balance. So we'll go ahead and fill out this credit card A and credit card B, and you could put whatever you wanted in here. Now let's say your minimum payments are $50 each on each card, and you could put your actual expenses. If you actually pay $50, you pay more. Then we have our loans, and if we saw them back in the previous debt balances, we had our car loan and our student loan, and we pay $300 a month there, and let's say $200 a month on the student loan. And then down below we have our savings accounts. Well, in our savings, let's say we put $150 away in our savings, and retirement we only put $100 a month. And then on our other expenses, let's say we have our clothing fund where we spend $100 a month, and our entertainment fund where we spend $50 a month. Now this is all estimates. So if you look down here, each category has their estimate amount of funds. So let's go ahead and fill this out as if we actually spent for that month. The house is pretty much always going to be the exact amount that we pay. Electric bill, let's say we went a little under. Water and trash, we hit it dead on. Same with the internet and cell phone and car insurance. Medical shouldn't range too much. Food and groceries, let's say we were a little under, and gas we were a little over because we took a nice little road trip. Okay, so over here in difference, this means how much we were estimated and how much we actually spent. So like here, we have a negative amount, which is good. That means we spent less than we thought we were going to pay. But down here, we have a positive amount, which means, hey, we spent more than we thought. And those are calculated down here to say, hey, this is how much we actually spent, and this is how much we were supposed to spend. So if it's negative, that's good. That means we saved money. If it's positive, that means we spent more money. So now down to credit cards. We'll go ahead and say we spent just the minimum payments. Same with our car loan and our student loan. Our savings account and our retirement, we spent the amount that we estimated. And we'll do the same for clothing and entertainment as well. Okay, now if we look here, we came into the month $3,200. We didn't make anything else in the rest of the month. Our total expenses, everything added up, is $2,800. That leaves us with an additional $400. Now I don't know about you, but without this nice little spreadsheet, it might be kind of hard to tell, especially when payments are being delayed 5-10 days, how much you actually have left in the bank. So this kind of helps you say, hey, this is how much money I should have left over after all my spendings. And then I made this nice little chart here based on all this information. The dark blue here, and there's a little legend at the bottom, is our living expenses. So you can see that most of our expenses here are living expenses. We have a little portion going to credit cards, a good portion going to loans, some going into savings, and some going into the other. Now, if we go ahead and look at this, you can say, hey, this is where living expenses, that's taking up a lot of my month-to-month income. So that's somewhere you can look at to try and shrink how much money you're spending. And I'll show you guys how to do that in another video, how we can try and save money from our month-to-month expenses. So let's continue on here. If we go to yearly overview now, we can see in the blue our net income and the orange our net expenses. Now as we progress, this will kind of give us a nice visual representation of how much we're spending on month to month, whether it's increasing or decreasing, and how much we're making, whether it's increasing or decreasing. And hopefully the amount we're spending is less than the amount we're earning. That way we're always in the positive. If we get into the negative for several months in a row, we might need to rethink our finances. And this kind of tells you, hey, you're hitting that mark every single month. You might want to rethink it. So let's go on to February. And the nice thing about this spreadsheet is after you fill in the first month, the rest of the months are pre-populated with the information. So you can see here that the credit cards are already listed, the housing, the living expenses, the loans, and everything else. However, let's say we paid off a credit card last month, or let's say we added on a new credit card. Let's just say we added on a new one. So now we have credit card C, because we had to take out an additional credit card to buy a new home renovation. Okay, cool. So now we added that on to February. Note that it doesn't get added on to January, but all the months afterwards will have it. So that's kind of a nice thing about the spreadsheet. It kind of updates as you progress. So let's go ahead and fill in the information for February, what we expect. And if you want, you can use the same values as January. So our house was $700, electric $100, cell phone was $100, car insurance, medical, food, and our gas expense. We had our credit cards. And then we had our car loan and our student loan, our savings, and our retirement. Then we had our clothes and our entertainment. Okay. Now let's say this month we started a new job and it pays bi-weekly. So we got our first payment on February. Let's say we got it on February the 7th. And it was in the amount of $1,400. And then we say I got our next payment February the 14th. And it was in the amount of $1,400. And let's say we missed a day of work, the next one. And so on February 28th, we got a check of $1,200. Now bi-weekly kind of pays off a little bit different. You can see it's every 2 weeks. We should probably update this to the 1st of February. Just to make it kind of but you can see the total there is a little bit more, and that's because bi-weekly goes out a little bit different than weekly. Some months you might have 2 paychecks, some months you might have 3, some months kind of varies, and so your funds will kind of vary without that. So you kind of have to make adjustments and save that money from one month to the next. And this spreadsheet will kind of help you say, hey, I only made $2,800 this month, but next month I made $4,000. So if you average it out, that's still about the same as you would have made on a monthly basis. So let's go ahead in here and fill this out with the information that we did last month. 700 for electric. We'll just kind of go with the standard for everything. And as you can see, as we're filling this out, the graph to the right is auto-populating with the information, and it'll continue to adjust as you keep adding things on the chart. So now I do kind of want to show you again this first yearly overview. So now we got a good picture of the month to month, and we got a good picture of our savings and our debt balances. So let's go ahead and look at the yearly overview again. As you can see now, in January, it shows us that we made approximately $3,200. And then you see that in February, it shot up to $4,000. Now in February and in January, you can see that our spending was less than our income, which is good. That means you're actually making money. You're not spending more money than you're making. And as this is a financial course, I do kind of want to teach you how to save money. And so go ahead and check out my next video. We're going to talk about ways that you can decrease your month-to-month bills while still kind of living your luxurious current lifestyle. And throughout the course, if you have any questions or comments, feel free to email me. My link's in the bottom below. You can click on the link, download the free spreadsheet. If you enjoy it, please share this video with your friends. Maybe they'll take something from the course as well.